Hey everybody, this is Jim at FreeChartVideos.com. It is a little bit before 5 o'clock on Monday, July 25th, and we're going to take a look at the S&P chart. And I want to remind you that this video is for educational purposes only, and it is not intended to be used as any form of investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own due diligence and make investment decisions that are suitable for your financial situation. I'm not a licensed professional, just a guy who draws lines on charts. So let's look at the S&P. Well, those of you who looked at the last video that I posted, I think I actually posted it over the weekend, will know what I mean when I say the fish were not strong enough to break the aquarium. If you don't know what that means is technical analysis gives us a sense of where the boundaries might lie in a stock chart. And typically, the price will meander back and forth and bounce off of those boundaries much the same way a fish bumps up against the sides of a tank and then has to change direction. The analogy breaks down, however, because fish are absolutely bound to that tank unless they develop sudden superfish strength. I was going to say superhuman, but that really doesn't work. And if they develop that kind of superhuman strength, then gotta move this line again. Then you know, they the fish would be able to get out of the aquarium. Obviously, stocks do get out of boundaries. You can see, for example, this line right here was broken. This served as a boundary for a while. Then it was broken. We've been between this and this for a while, and either this bottom line or this top line is going to break. And a matter of fact, I can tell you absolutely for sure that it will happen sometime between now and early May of 2012. And actually, it will likely happen much sooner than that. But obviously, I'm just pointing out the apex of this pattern, that it has to go before then, and it almost certainly will. So here's what I'm looking at. I am still looking at this as a pattern of either consolidation or reversal, or you might call it a continuation pattern or a reversal. The good thing about this is, as I've mentioned in previous videos, we can measure the height of this pattern, and I'm doing so at a fairly hey, what? Let's just take that bottom right there. There, I'm doing this at a conservative spot in the pattern. Wherever this breaks out, let's say it breaks out the beginning of September, then we would look for a move somewhere. If it breaks out to the top, we would look for a move to a target of around 1480. If it breaks out to the bottom, then we're looking for a move to about 1150. I would extend that and say probably a move to about 1125, 1126, mid 1120s, just because this is a line that would need to be tested. So what happened today was a slightly down day, which I think, considering the news, everyone was expecting. And as a matter of fact, to be honest with you, it was a pretty mild down day, according to what a lot of people seem to be thinking would happen when the news came down that there was not going to be a budget deal done in time for the Asian markets to open. You know, I think it's frankly much ado about nothing. I'm not saying that these issues aren't important, but what I'm saying is, you know, just a handful of men should they decide to, could say, okay, we've got a deal. Now, if the markets had sold off, 5 or 6% today, how stupid would that be, knowing that someone is giving up that 5 or 6% and it can be gained right back as soon as those men decide to say, okay, we'll do a deal. So my feeling is I'm pretending as if none of that stuff matters. I'm just doing the chart. That might be crazy, and I might get burned, but that's what I'm doing. So we've still not reached this top line up here, this blue line. I'm expecting to do that. Let me put it this way. I was expecting for that to happen. It still may happen, but I thought we were going to get something kind of like we did back here, where there was a few days of sideways movement after breaking this steep upper trend line right here. See, we were going up, went sideways, and then went up to try to do a back test. Then we sold back. Then we went up again, went sideways, and we are now in the second day of sideways movement, which maybe is exactly where we need to be. Perhaps tomorrow is an up day. We kick up to test this, and then we sell back down and test support someplace else. I cannot tell you that for sure. All I can say is I would think we could tag that line. Now here's what's interesting with this pattern we're in, is that we had a solid touch at the top, then we had a solid touch at the bottom, solid touch at the top, but then we didn't make it all the way down to the bottom. Instead, we stopped at the neckline of this sort of a bowl-shaped, inverted, complex head and shoulders right here. That stopped very nicely there, then we started to head back up. Now, looking a little bit closer, where did we bounce today? Well, we bounced at roughly what would have been the neckline of an inverted head and shoulders had this decided to make a right shoulder. So we bounced at an area of expected support. Well, where did we end the day? Well, we ended the day, and this line was already there. Go look on one of the other videos. It might have been drawn more like that. I may have moved it just a hair. But we ended the day on this line, which was tested here, and it held. Then it broke, actually pretty much opened lower, came back up over it, and then held as support at the end of the day. So what I'm looking at is a number of lines of support and resistance. Resistance, let me just point them out. This would be resistance. This would be resistance because that's the high we set back in May. This would be resistance because it's the top of the pattern. This would be resistance because we were unable to break that for 2 times last week. This should be some support because, as I mentioned, it was that kind of a neckline thing. And additionally, this can give some support. I'm not expecting a lot out of that. This right here should also give some support. And then finally we have this rising line right here that could give support from these bottoms. And then finally, well, not finally, we've got this line that is a long-term trend line that is kind of an alternate line from the starting at the very bottom. Well, actually not the very bottom, but starting near the bottom of the bear market climax selling. And then that runs up across these 2 points, and then also across to where we bounced last month, or earlier in this month. When was it? Rather than just make this up. Yeah, it was where we bounced in June. So it's a little complex what's going on here, but the gist of it is very simple, and that is this line, which way is it going to go? All these other things are there just to kind of help us gauge where we think it's going to go. And I will say this, that if you can be patient, you might try to play in between these lines as it works things out, but that's going to be probably some rough sledding. The safest thing to do is to wait for a break out of this pattern, either to the upside or to the downside, and then you have a reasonable expectation of roughly 120 points, depending upon either way, depending upon which way it goes. So look, that's the S&P 500 update for July 25th. I appreciate you taking the time out to watch this. Please come by freechartvideos.com and take a look around. I'm in the process of kind of sorting out what I'm going to be doing starting on October 1. Things will continue exactly as they have been up until that point, and then I will probably offer fewer free videos and start an affordable subscription to the daily update. And but there'll still be something that I want to put out there in the way of help for people who don't want to make any kind of investment in this. So anyway, take care. Thanks for watching. There'll be another one tomorrow.